One, two, three. Boom! We are alive, ladies and gentlemen. Thank you all for joining us on another episode. This is Tiho and the Arcane Bear. We're going to be taking a look at Ethereum first and foremost. We touched into a new all-time highs as of last night. Very nice to see. We very quickly retraced a little bit out of that resistance area that we had broken into. Obviously, new all-time highs. We'll try to do that to one. It will kind of psych the average investor out. Again, retrace the price and then generally move on to higher prices. So what we're going to do is dive over into the charts as we normally do and take a look and focus specifically on Ethereum today for the most part and our upwards price projections, just because I believe it's something fun that we can do. So you can see now Ethereum open on the daily. Give us a thumbs up for Ethereum. Yeah, thumbs up. Can we get 1,000 thumbs up for Ethereum? Try. The more thumbs up, the better. The higher Ethereum goes. Tell you what, guys, give a thumbs up, the higher Ethereum goes. That's it. That's what it is. So for every thumbs up we get, Ethereum will go up $1. I promise. No, I don't promise that. Okay, so we're going to make this conjecture here. And I think that it's important to do this, because it's fun, number one. And we are in a bull market, don't you know, which is another important part. So this is the chart that we've been following on Ethereum for months now. We had our primary breakout start in March back at the spring. And these upward regression lines are areas that are key points of focus for us as well. We could technically draw a few more in, which is kind of where we've peaked out right now. So we've got 3 regression lines that I want to see us break through as massive areas of resistance before we go to around $2,600 and much higher. So I believe out of this trading range that we were just following, which is this nice horizontal range here, I do believe that we are going to continue to break out higher. So excuse a little bit of the noise here. We had the spring, worked out beautifully, that nice long wick, lots amount of volume come in. We've been rising on fairly diminished supply in comparison with the big chunks that the whales can take out of the current market at any given moment. We are still in phase D though, which means we are probably going to see a little bit more of a backup. We could come back down low as 1340 on this one, as we did hit primary resistance from our secondary test and our previous automatic rally and stubbed up against that. Now, I want to look at the smaller minutia here just for a little bit as we entered into a shorter trading range. And I think this is important to keep an eye on, is this trading range that's developing here. It's much more noticeable on the 15-minute. As you can tell, we are, again, I thought this was a nice potential falling, or what we would call a bull flag. Effectively, move these up here a little bit like this, and that we've broken out and hit the backup phase. We can see it with a little bit of our momentum oscillators. Again, just the minutia for a minute. I'm still in a great position here so far. Everything is looking good, but it's this much larger time frame that shows us our 3 primary areas of regression resistance. So this is another way to do kind of a retake on the point and figure charts for those of you who are doing well in your studies. And what we're going to do right now is use the Fibonacci retracement tool. If we go from the peak of our previous all-time high down to the spring of this March during the pandemic, which is around $80, we'll just put it at 81, 89 there, what you can start to see is the importance of the regression lines. Now, first and foremost, we've got one we've just hit here, which is the previous all-time high, and the next one up here, which is the 1618. Now, the fun part, which I'm sure a lot of you are excited about, and what we've been going over in the Bear Den, is Ethereum to 8K, maybe even higher. But here's where this lines up. Now, what's fun is that even though the 4236 is around $6,000, and we've gone over this before, when you break out and you get to these areas of blue sky discovery, what you find is there's a lot of FOMO. The people who would never normally have bought Ethereum end up buying it at like $7 grand, even though we were buying it back at $80 in March. And that's like where the most retail investors make their biggest mistakes. I don't know how many conversations we've had with members who bought Bitcoin at like $17,000 or $20,000 because they thought it would just go to $100,000 then. And although it's good to see the long-term macro perspective of Bitcoin going to hundreds of thousands of dollars, it's a time process. It takes time to go through that process. So ultimately what you end up finding is there's a lot of upward volatility here, and we usually get an even further out extension of our original 168. So you kind of make a hypothesis, which is our regression line of around $2,600 to $2,400 back down to the spring, and that's where you start to get these much higher numbers in terms of like $10,000 to $12,000, and this is like the FOMO area. So everything to 8 to 12,000. Someone's going to make a video about how TIHO is like secretly working for Q. That's just what happened there. But this is the area of FOMO. So the FOMO is real. Please remember that once we break past 6,000, that's like let's say that's a nice hefty, obvious move. But when you get into the final areas of FOMO, it can ride us upwards of maybe $12,000. So this secondary Fibonacci extension tool basically becomes our way to chart FOMO. So it's pretty clear to me at this point that what we're going to end up seeing is a breakout to around $6,000 with FOMO upwards of 8 to 12,000. And again, that will be like the very final retail investors who bought Bitcoin at 20 grand. And it'll pretty much it'll highlight the top of the bull market for now. Now, I have conjecture that we actually come back down to around $3,600 to $2,400 and form a new trading range. So this is just like, let's think 2 to 5 years out, where we go up to 12,000, we get a crazy blow off top, we come down, we see distribution, and we get another big reaccumulation pattern that does this, and then we see Ethereum go potentially a lot higher in the long run. I think Bitcoin is going to do something similar. And to that degree, I actually think what we'll see in Bitcoin and Ethereum both is actually more of a reaccumulation after distribution instead of this multi-year accumulation that we just saw in Ethereum as well. So when you're studying, guys, you don't really want to focus too much on that long-term outward projection, because it can fool you into making poor decisions. Like, oh, if I get in at this point and I do that and it goes to $8,000 and I'll make this much money. You really want to be thinking, first off, don't lose money. Now, on the plus side, we're in a bull market, so you can pretty much rely on that until we see all the enormous amounts of supply start to come in. So we've gone over this in our previous videos as well, and I do believe it's important, is to look at areas like Glassnode, which provide us this really unique data and perspective about the amount of open liquidity there are in the markets. So we've done this for Bitcoin, and because we're kind of trying to focus on Ethereum specifically today, this is a great way to view this. So as you can see, since August 20th, the amount of open supply or liquid supply of Ethereum has been dropping rather dramatically. And on the 19th, when we had our spring, it dropped even more. One of the biggest drops day-over-day drops we've had since August. Now, one of the things I'm really interested in, and we've gone over this in the private group, is the DeFi sector. Now, when I first joined the DeFi area, I'm like, well, this is just some market hype word. I'm like, we have Ethereum and Bitcoin. Those are both DeFi already. Like, what's this new marketing term, basically? That's what I assumed it was, just a marketing term. I was wrong. Around August to September, I started to realize that there's actually a lot of new technology that are taking place and make both Bitcoin and Ethereum more valuable by doing so. Both Link and AAVE are huge leaders of that. Now, what I have right now open is the DeFi perpetuals. So some of you will recognize the Livermore opening megaphone structure, which is a key moment of breakouts of backup supplies, SOS, backup, SOS, backup. And what you can see is we had a really nice spring come in the other day in the entire DeFi sector to test the market, notified by the big wicks, and we're seeing the first primary SOS and the backup. Once the DeFi sector breaks out of here, I believe that both DeFi and Bitcoin and Ethereum are going to ride together, and that the DeFi sector, Bitcoin and Ethereum, are actually going to make each other more valuable. Now, if you're a maximalist still, you've totally missed the boat. And that's because you're not paying attention to the technology and you're focusing on joining cults instead of being ultimately curious. Curiosity here will pay off orders of magnitude higher than joining cults. I can tell you that. Cults will pretty much just lose you money. So don't do that. I suggest against it. If you want to, you go ahead, you do whatever you want to do. Hey, you're a human and we all make mistakes. But this DeFi sector represents a basket of like Maker, KNC, AAVE, Wi-Fi, Band, Avalanche, SRM, Serum, SRX, and a bunch of others created by FTX. So this is a really nice way for us to measure the entirety of the DeFi sector, remembering again that both Ethereum and Bitcoin are going to become more valuable because of it. And then more importantly, as you see the liquidity of Ethereum start to drop, you might see a deflationary model come in. There's very, very easy reason to see why we could be headed towards $8,000 to $12,000 Ethereum and multiple hundreds of thousands of dollars for Bitcoin, at least temporarily. Now, bull market blow-offs are almost always unsustainable. Wait, hold on, let me say that again. They are always unsustainable. So you have these huge markups in prices, and then and then the process of that distribution takes place as bigger players start to basically take profits. Now, we could make argument that there are a few players in here that recognize that they should be measuring their portfolio in Bitcoin, but that's not the majority yet. If that starts to change over the next few decades, fantastic. For now, the big players are still offering their clients alpha in USD, and that's why we chart against USD. I used to only chart against Bitcoin, and that changed dramatically as these big funds started to show up, because they're not going to their clients going, hey, look how much Bitcoin we made this year. They go, look how much US dollar we made you this year. And until that changes, the alpha for the big players is USD. And remember, these people have hundreds of billions of dollars, and you do not. Well, some of you do, actually. Some of you have billions of dollars I've talked to. But that's not the majority. That is a very thin, select group of people, right? So again, what we're trying to do is look at the more macro majority perspective instead of the micro minority perspective, because it's a different player. And again, we went over this yesterday, that the trash dump of the world is one of the biggest Bitcoin hodlers on the planet. I mean, trash dumps hold more Bitcoin than any of the big players in orders of magnitude. And that's important, again, to remember the illiquidity of supply and the volatility of price. So is there any more that we can go over here? Now, supply has been added. Let's see, do they have the percentage of supply and profits of supply? Okay, this will be kind of fun. I haven't looked at this on Glassnode. It'll be a fun metric. Since 2020, the beginning here in March, almost all of it has been in profit. Now, what we can start to see is that more retail is showing up, because they would buy at $1,300, $1,400, and then sell at a loss. So you can see that there is actually a fairly dramatic change of people of retail showing up here in this particular graph. For the first time, you're actually seeing people that are not in profit because they bought and sold in irregular areas. The other important aspect of this is how many wallets hold between 1 to 10,000. Oh, I don't have this professional. I thought I had the professional plan. Well, screw you, Glassnode. Anyways, unimportant. We'll just jump away from Glassnode then. You get less of our time today, Glassnode. So again, I think we're easily going to run to $2,600 on this next breakout. On the smaller time frame here, for those of you that have been studying, we are in phase D. So even though there is a potential for a declination of both price and volume in phase D, categorized by some degree or another by this area here, as long as if we stay above the middle of this band, and more importantly get above what's our Bollinger and this resistance area that we have drawn in from all the way back here, then we are going to see a very big price movement soon, which will indicate phase E. So phase E will be indicated by probably a move of $1,600 to $1,800 and a final backup phase before we run to $2,200, $2,400, and $2,600 in Ethereum, and then start again another reaccumulation pattern up probably at the highest regression line, which again is indicated by here, our 1618 on the Fibonacci extension retracement tool, and the $2,600 area. Now, quickly, we'll go over Bitcoin. It is our market leader, so keep that in mind. I don't know why my screen keeps jumping back and forth. We had our spring. I can't remember how many of you were like, oh my God, is this distribution? Well, look, it wasn't. Yay, we were right. It feels good to have that confidence, especially when the prices are low. Did you accumulate any more? I hope so, because we're in the bottom of the trading range. Michael Saylor definitely did. Anyone who's good at this will have accumulated in the value add zone, which is below our point of control here. So anytime at the sign of weakness, even the primary supports and the springs are areas of accumulation. I will likely be starting to build a position. Well, I already have a spot position, but building some type of leverage position in Bitcoin here as the volatility diminishes. Currently, we have an 8% spread through this trading range, so we're looking good. I'm expecting we're going to see a backup maybe as low as 32,000, and then phase D will really start, which will be the first signs of strength. So for those of you that would study, you would now know that we've created our first test, ladies and gentlemen. So we can now draw in the test of phase D. And this is important, again, to remember that the more time you spend really building the confidence of knowing where you are in the market, the easier it becomes. The test is going to probably bring us back to 32,000 of the POC line here. That would be fantastic to see. It may not. It may continue higher, but again, we're going to want to watch the trading ranges. Anyways, we're going to keep today's episode short. We're not going to do any community conversations because I have to drive to the city. I got to pick up some more gear and do fingerprints and all that fun stuff because I'm officially a full-time resident of Costa Rica now, which is a fantastic reason to live here. I appreciate that. This is Tio with the Arcane Bear. Sorry I didn't get to any of your guys' thoughts or questions today. If you like this content, remember to give us those thumbs up. We will be again live tomorrow, and we will have, we'll actually probably be in a hotel room doing our live. That'll be interesting. We'll see how that goes. I'm going to have to remember to bring the microphone and the camera and the computer and the iPad and the little switchy mabobber here. But anyways, I really appreciate your guys' all support. Remember, the more thumbs up this video gets, the higher Ethereum goes. So hit that thumbs up button. That's the way you make Ethereum go higher. I swear, that's how this works. Market isn't about supply or demand characteristics at all. It's just about how many times you like this video. Anyways, this is Tio with the Arcane Bear. Thank you guys all for joining us on today's episode. We'll see you again tomorrow, probably at 3 p.m. our regular time. Yeah, boom.